Hyperliquid is fascinating. It's this huge crypto project that still seems to be a hidden champion because the attention on the project is very, very small, yet the project is worth billions with a B. This is not the first video on Hyperliquid on this channel. The videos tend to not get that many views, so the average video is here the gray area, and this specific very first video on Hyperliquid was published 252 days ago and is indicated by this blue line. Another video followed, it underperformed. Here's another video, it underperformed even more, and so on and so on. So really, it seems like the average investor doesn't really care. There's a lot of capital in the project, but it's not like the masses are currently investing in Hyperliquid. Just have a look at this. Hyperliquid with the Hype token is now the 15th largest cryptocurrency with 14 billion of market cap, and any other cryptocurrency that's larger than Hyperliquid has been around for much, much longer. They had been able to benefit from the early growth of crypto, but Hyperliquid came in late and still was able to attract a lot of capital. Just have a look at this comparison over here. This is a list of decentralized exchanges with their market cap. And Hyperliquid is at number 1 with a large margin. Number 2, Uniswap, the largest decentralized exchange for the spot market across various blockchains, is less than half the size of Hyperliquid. Now, there are two ways to interpret this, right? The first way is that Hyperliquid is simply so super successful that it's great, that it's so large. But the second way to interpret this is that maybe there is not that much more upside potential anymore. If Hyperliquid is already double the size of the second largest decentralized exchange, can it still really double, triple or quadruple from here? Is this large market cap potentially hindering for the Hype token price development? And it might not just be the market cap that's problematic. There's also token dilution. Over here we see the tokenomics of the Hype token. We are currently at 373 million Hype tokens that are floating, and at one point this will go up all the way to 1 billion, so roughly a 3x in circulating supply. Who will get that supply? It's the team, so the core contributors, and its future community rewards and emissions. Both of this will be selling pressure. The team will start getting their supply in November of this year, only 3 months from now. So this doesn't look too great, but then we've also got the other story, the huge wave of adoption for the Hype protocol. What we see here is how much value has been bridged over to the Hype blockchain, and that's now close to 5 billion. Under that context, a market cap of 14 billion doesn't look that unrealistic anymore. The Hype price has also outperformed major cryptocurrencies. This is now Hype relative to Ethereum, an outperformance of 170%. Now, in the last 2 months, Ethereum did better than Hype because of the ETF inflows and the Ethereum treasury companies. This is an underperformance of 42%. But the question is, can we potentially see a recovery similar to what we saw at the beginning of 2015? Are we going to see the same kind of price development yet one more time? And is Hype going to hit new all-time highs? Fact is that the market of Hyperliquid is expanding extremely rapidly. Hyperliquid is a perpetual futures exchange. So it's not a decentralized exchange that handles with spot directly, with the assets directly. It's a decentralized exchange that focuses on bets on the price with leverage. So there's 100% player versus player. There's no asset getting moved here. That's simply just bets against one another. And many market participants prefer perpetual futures over the spot market because they allow for 3 things. They allow for quick leverage, they allow for small transaction fees, as in the spread and the slippage tends to be low, but also they enable betting on falling prices. And so this is the growth of all perpetual futures across all chains over time. And here is the growth of that trading volume based on different decentralized perp exchanges. And of course, this blue area over here, that's Hyperliquid. Hyperliquid came out of nowhere and started to dominate the market. Just have a look at this. In the last 30 days, Hyperliquid had a perp trading volume of 370 billion. Ethereum only of 63 billion. So that's roughly a 6x. In the last 24 hours, the delta is even larger. That is almost a 5x. So even within the last 30 days, we see the growth of Hyperliquid accelerating. Have a look at this chart, the perpetual futures trading volume of Binance relative to Hyperliquid. Hyperliquid currently has a market share of 20%, with the tendency of this growing as well. So it's a direct competition to the centralized exchanges. And so that then begs the question where the Hype token will go. On the one hand, we've got an inflating token supply. On the other hand, we've got growing adoption. Very fast, constant growing adoption. I personally also like to use the Hyperliquid platform again to play my relative valuation trades that I often discuss here on this channel. There is one potential problem with the Hype token, and that is the leverage that's in the asset. Because Hyperliquid enables to bet on rising prices with leverage, most people just buy the Hype token directly with that leverage on the Hyperliquid platform. So the people that use the perpetual futures to get exposure to the Hype token tend to bet on rising prices. The funding rate tends to be positive. But have a look at the open interest of Hype over time. There is strong correlation between the amount of bets on the price and the spot price itself. And there's already close to 2 billion worth of bets on the Hype price. That's massive. The trading volume of those perpetual futures is also going up over time. And usually when perpetual futures trading volume is going up and when open interest is going up, that an asset is rather heated and that the price can go down further. But I'm not sure if the same logic holds for the Hype token, because many people that buy Hype will do this over the perpetual futures. It's simply users of the platform that like the platform a lot, that enjoy using the platform, and they simply want to bet on future growth of the platform. There are even community pools that just do nothing but get exposure to Hyperliquid. Here, this is a 6x Hyperliquid exposure. So there's only 1.2 million of margin used, while the position value is 7 million worth. But check this out, this is a community pool that goes along Hype and Bitcoin and gets short a lot of smaller altcoins. But this strategy didn't necessarily perform that well. Again, because Hyperliquid did have a hard time recently. This is Hype relative to Ethereum. The problem with that comparison to Ethereum was the demand of Ethereum recently through the ETFs and through the treasury companies. So that's what we see in this chart here, right? There's long-term accumulation. Those entities tend to just buy and never sell, which reduces the liquid supply of Ethereum, which tends to push up the price further. But once we compare the Hype token to the rest of the altcoin market, so not just relative to Ethereum, but to all the other altcoins, the performance drop doesn't seem to be too bad. It seems like the Hype token is stabilizing. Have a look at this. This is Hype relative to others. So the market cap of all of the altcoins that are not in the top 10. And in the last 2.5 months, we tended to trade in a range. And we are rather at the lower end of that range, with the potential risk of an underperformance of maybe 5%, but the potential reward of an outperformance of 25%. So really, there is so much garbage in crypto, so many dead projects, so much manipulation, but Hype, I believe, is different. Hype has real adoption, has real growth. And yes, the tokenomics aren't perfect, but it looks like the platform still has quite a bit of room to grow. It will likely continue to take away market share from the centralized exchanges. And so Hype is one of the very few altcoins that I believe is worth holding for some time. But again, be prepared for some volatility because the team will get token unlocks 3 months from now. And they're likely going to sell some of those tokens to just cash in on the current hype, no pun intended. Now, fundamentally, there are 2 ways to make money with investing. The first way is to just bet on long-term adoption and to bet on monetary debasement. So that's the idea of dollar cost averaging, right? We buy into Bitcoin all the time. We just bet on the long-term growth chart. For example, had you bought $1,000 worth of Bitcoin every month for the last 5 years, so you held Bitcoin for more than a single cycle, then you'd now have $213,000 worth of BTC, and you outperformed the S&P 500 and the gold market by more than 2x. The reason why such an approach works is because more and more capital long-term flows into the asset. So more people buy the asset without the intention of selling it. More and more people just buy buy the asset in order to preserve purchasing power. This works with Bitcoin. It also works with the property market. It also works with the stock market. People don't necessarily buy those assets in order to flip them quickly. So have a look at the number of wallets that own at least one Bitcoin. This tended to go up long term. This growth has stopped to a degree 2 years ago, but now we've got Wall Street that instead buys the Bitcoin. So there's still long-term adoption and thus Bitcoin price appreciation. The treasury companies, they never sell, and the ETFs also rarely sell. There's only very few instances where we see net selling. We really have to zoom in to see those kind of events. So that's approach number one, right? We bet on adoption, we bet on further capital accumulation, but then there's also approach number two, and that's trying to beat the market, right? It's trying to buy low and sell high, and effectively what we're doing there is we're taking money away from the person that's not able to time the market as well in order to get outperformance. So if you want to get more performance than the average investor, we're effectively taking it away from the investor that doesn't really know what they're doing. So let's say we are using tools like the realized price, right? The average cost basis of the market, and we buy much more Bitcoin whenever the current price is below that realized price. Then of course we are buying when everybody is very skeptical about crypto and Bitcoin. We are in a way doing a contrarian bet. Nobody wants to buy Bitcoin, so we do. The same is true when Bitcoin is high, right? For example, here, the CBBI indicator, we want to sell when this is rather high, when everybody is hyped about Bitcoin, when everybody thinks that Bitcoin will go to the moon, and the rally accelerates. That's when we want to potentially exit. We are not yet at those extremely high levels. But again, we always want to do the opposite of what most other people are doing. Because that's the way to make money in crypto, right? The minority is able to beat the masses. The masses tend to do the wrong things. Only the people that do the opposite of what most other people do, they accumulate above average returns. If you do a 2x on top of just buying and holding Bitcoin, then you basically took all the money away from somebody else, or you took 50% away from two other people. You get the gist. And so that's why I like the crypto market. And that's why I don't speculate, for example, on the currency market, because the currency market is extremely efficient. It's got all kinds of quants and hedge funds working for it. It's a very large market. It's incredibly hard to beat. When we are taking money away from the people that aren't as smart in the market, we're basically seeing all the other market participants as competitors. And we want to have very weak competition, not strong competition. We don't want to have the Einstein hedge funds as our competition. That's why the currency markets are very poor for active speculation for the average person. And the same could be said potentially for the stock market, right? The stock market also tends to be somewhat efficient. Before my time in crypto, many years ago, I was actually a professional poker player. I paid my study fees, my private tuition with the earnings from poker. I lived from poker several years. I used to live in Gibraltar at the time. With poker, I learned that it's not just the skills that matter. It's not just about calculating probabilities and reading tells, etc. It's also about who you're sitting with at the table. If the table is only made out of sharks, it's only made out of other professional players, then there's no money to be made. But if you're sitting at the table where all the other players are just beginners, then you don't need that much skill in order to beat the game, in order to make money. And it's the same concept here for speculation. If we want to outperform the average investor, we better participate in assets and in markets where we're mainly sitting at the table with fish, not with shark, right? We want to be in a soft market, in an inefficient market. And so here is where I see the inefficiency in crypto. Crypto as a whole is already comparatively inefficient, at least in relation to the currency market or to the stock market. But really, the main inefficiency comes from token dilution. For example, have a look at this. The ape token has a lot of token dilution. Here is the number of ape tokens over time. 3 years ago, this was at 284 million. Now it's at 908 million. There's all of those new tokens that get issued all the time that goes to the insiders and to the team and to early investors, etc. They get new tokens and they dump those tokens on the market. And this is not a new concept I'm talking about just recently. I even talked about this specifically for the ape token just a few months ago. Have a look at this video. How solid is the ApeCoin rally? This was published 9 months ago on the 22nd of October. At the time, the price was at $1.57. And here we are today at 63 cents. We had a massive rally in the ape price at the time, but relative to Bitcoin, ape went down massively afterwards because the rally was triggered by some news event, right? People got very excited about ape and then the insiders dumped very quickly. It's something that's not really surprising. This is an underperformance of 78%, and this is one sign of market inefficiency, right? If everybody is buying into a rally, despite the terrible tokenomics, that's an opportunity to make money. We're not buying ape, we do the exact opposite. We are selling ape that we don't have. We are shorting the ape token. In other words, we make money whenever the price loses versus Bitcoin, Ethereum, Solana, the major cryptocurrencies that tend to appreciate over time. Now, ApeCoin is just one example. The whole altcoin market has this problem, and the problem is massive. It's a structural problem that won't change anytime soon. Have a look at the value of the token unlocks of the newly hitting tokens that come to the market every single week. It tends to be at around 1 billion per week. $1 billion of tokens need to be purchased every single week just for the altcoin prices to stay flat. Now, the counter argument is that all cryptocurrencies are inflationary to a degree. Even Bitcoin is. But compare this with Bitcoin. Bitcoin's inflation rate is at 0.83%, and that is per year. The market cap of Bitcoin is 2.34 trillion. So when we multiply the numbers, we've got potential sell pressure of 373 million per week. Roughly 1/3 of what the altcoins need to be bought at. So Bitcoin has less selling pressure, and at the same time we've got all of the supply absorption by the ETFs and by the Bitcoin treasury companies. And so when there's an asset that's less inflationary, that has less sell pressure, and at the same time has more buying pressure due to Wall Street, then of course that asset has to outperform. And historically we have exactly seen that. Since beginning of 2022 to today, the Bitcoin market cap relative to the others market cap, so the market cap of the smaller altcoins, has gone up by 291%. But this is actually underrepresenting the problem, because this is again just comparing market caps. But the prices tend to go down for the altcoins much faster because of the token dilution. So let's say we've got an altcoin of $1 billion of market cap. Now we double the amount of tokens, and thus the token price gets cut in half. The market cap would still be the same, right? The token price went down by 50%. The market cap is unchanged. So the underperformance that we get from the token dilution isn't even presented here in this chart. This chart just shows how long-term people are exiting the altcoin market in favor of, in this case, Bitcoin. But the chart relative to Ethereum and relative to Solana looks pretty much the same. Here's another example to show the difference between price and market cap. This here's WorldCoin. WorldCoin supply went from 522 million to currently 3.8 billion. So roughly a 7x in the supply in the span of just 2 years. The WorldCoin price is close to all-time lows. The WorldCoin market cap is quite close to all-time highs. It's not that close to the low. Again, the market cap can be rather stable while the price is crashing. Again, the market cap can be rather stable while the price is crashing. So really, you're getting the return of the price, not of the market cap. And that's why most retail investors lose over time. Have a look at Bitcoin relative to WorldCoin. It's just going up. Or have a look at Bitcoin relative to Ape. It's also just going up. And this is, I believe, the key to making money in crypto. It's to take advantage of that inefficiency. It's to make money with all of that marketing dollars that are spent by the team, by the early investors, to attract other retail investors to buy things like ApeCoin or WorldCoin. So then a lot of liquidity is in the token that then the insiders can dump on that liquidity. But we can make money from that dumping simply by betting on falling prices of ApeCoin or of WorldCoin, at the same time betting on rising prices of Bitcoin, Ethereum and Solana. So we're playing exactly the delta of those two assets. That's why we get this long-term appreciating trend. I just took those two examples over here, but again, this is a structural problem with the altcoins. The selling is much, much higher than the market can digest. it's even higher than what we have for Bitcoin, as we've already discussed. I'm making money with those relative valuation bets already for more than 4 years. And had I just dollar cost average into Bitcoin, I of course still would have made a lot of money, but because of the relative valuation bets, I didn't just get the return that's indicated here by the gray line, I got the return that's indicated by the black line. So this is something I'm doing already for a long time, quite successfully, quite consistently. And recently I even started a capital pool for the premium members where I execute exactly that strategy. And so far, after 1 month of trading, this is already bringing us annualized 74%, very consistently with a maximum drawdown so far of 2.6%. So really, I don't think that the edge in the crypto market is to find the next 5 or 10x altcoin. I think the edge in the market is to simply continuously quickly grow the capital with little volatility, but to use the market structure to our advantage. With a random meme coin gamble, we can only invest a few hundred, maybe a few $1,000s. But when we actually have consistent growth with not that much volatility, suddenly we can invest much more capital, right? Investing a lot of capital into Bitcoin feels much better than investing a lot of capital in a small meme coin, right? We can deploy more capital. Thus, even if we don't have 10x returns in the span of a few days, it doesn't matter. If we've got above average returns consistently, if we've got a high Sharpe ratio, we are okay. Now, unfortunately, due to extreme demand, I had to close deposits for the copy trading pool. There will be a new capital trading pool starting at the beginning of next year, but right now I simply trade with the capital that I got from the members. But you can still manually copy trade me. For example here, right? This was the WorldCoin short. I bet on falling prices of WorldCoin and on rising prices of Ethereum. That was on July 23rd. And so many premium members simply copy trade me, right? There is quite a lot of gains to be made in those individual transactions. But it's not about the individual transactions, right? It's about the long term. It seems like quite complex, right? We go long one thing, we go short the other thing. It also sounds quite risky. But really, in the end, if we set this up properly, it's not that risky and it's also not that complicated. There's really only 2 videos to watch. It's this one, using perpetual futures on Hyperliquid, and here this one, probably even more important, risk management with relative valuation bets. It's only 1 hour of content. After this 1 hour, you know exactly what to do in order to get performances like this. And you will also know what to do in order to just copy trade whatever I do, so that you get the same kind of returns that I do. So really, just watch this video and watch this video and you're good to go. I'm not going to read it out in this video, but feel free to stop the video and read the feedback that I get. It's always nice to get this kind of feedback. If for whatever reason you do not like premium, then just message me within the first 7 days of signing up and I refund you the fee. It's currently $125 per month. If you don't like it, you'll just get that money back. Just message me. A link to premium directly pops up over here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.